I'm Matt Bischoff with REIT.com here in San Diego for REIT World 2012. Joining me is Ed Pettinella, the President and CEO of Home Properties. So Ed, your company's been involved in both acquiring assets as well as developing new properties. What's your outlook for both of those in the coming year?
I think we're going to have another strong year in 2013. Over the past 30 months, we've produced in acquisitions about $1.1 billion. And we've been active in the development area also. We're hoping to do $200 to $300 million in acquisitions for 13, and about $100 million will be placed in the development area, predominantly on the East Coast.
And your company has gained its reputation for acquiring and upgrading properties. In today's market environment, what type of timeline in terms of you seeing a return on your investment, factoring in rehab costs, rental rates, and any tenant issues?
The good news is we're in an environment where interest rates are so low. We are seeing all our deals at an unprecedented level being accretive day one, meaning we're making money day one. In the past years, it would take about a year and a half to really start to see the returns come forward. But that $1.1 billion I told you about that we started producing and from May of 2010 until now, all have been accretive and all have been producing, which is helping our bottom line. In terms of the tenant problems that could happen when you try to rehab, we do it one at a time. We do not shut down particular buildings. So it's done on a least adverse impact for our tenant base, and it works out very, very well then.
And the multifamily sector has enjoyed fantastic fundamentals recently. But are there any market segments or regions where that momentum may be more difficult to maintain?
First, I'd say that we've gotten out of many markets that we thought were not high growth, high barrier markets. Detroit, Toledo, Columbus, upstate New York, Pittsburgh. And we moved most of those monies into our 7 major markets: Chicago, Boston, Long Island, Northern New Jersey, Philadelphia, and Baltimore and DC, the DC region. We like those 7 markets. The 2 top performing markets right now are Boston and Philadelphia. My sense is that you could see possibly Long Island and Chicago take the lead in 2013 or 14, but all of them have been producing very well, and we've whittled it down to a group of 7 that we think will perform over a full cycle in a good fashion.
And lastly, looking at the multifamily sector as a whole, what do you think is going to be the dominant theme or trend in 2013?
I think a continued push of growth in the multifamily business. I think the percentage of people renting is going to continue to increase. Immigration levels are increasing, and then almost 80+% definitely go for a rental type situation when they first come to the country. 18 to 24-year-olds, even out beyond 30-year-olds, will look to renting. That age bracket is increasing in America. You have housing, which is coming off the bottom, but it's not a robust period. You might have new starts totaling 700, 800,000, but not near the levels where traditionally it's been 1.5 million units per year. And lastly, I think the fact that banks are still making it very difficult to get a new home. The underwriting standards are very stringent, and I think that will continue into 2013. So I believe all those factors and probably some others will cause multifamily to do very well again in 13.
Ed, thank you so much for joining us.
Thank you, Matt. Appreciate it.
For more on this and other REIT news and analysis, be sure to visit REIT.com.